All right, I've kicked us off on Discord. We're good to go.
Okay, welcome everybody to the Bookmap Academy meeting. I'm sorry, last week I could not attend. I had a kind of emergency event. So we're doing it. We usually have this meeting every Thursday at 4 p.m. So couldn't do it last week. Here we are. Welcome everybody, and sorry about that. The goals here is to go through your content, and it's a coaching and mentoring program here at Bookmap. Let me show you all about it here. If you are interested, go to bookmap.com, click on the More button up here, and then you'll see Bookmap Academy here. All right, so you can apply here and you can join. You don't need to even purchase Bookmap to join this program. You can use the free version, but it is quite limited. The whole goal here is that you're going to journal your trading activity. So you can do that with the crypto version or the free version with one crypto market. But anyway, you'll document your trading. It'll get you in the habit of documenting your trading activity, and that will make you a better trader. And then we will give you feedback on that. And then you're creating content along the way and becoming better and sharing that content in the Academy room. So that's a win-win right there. And the goal is that you will meet like-minded traders, you will become a better trader, and then we put this step process together here. So when you first join, you will apply to the Bookmap Junior Academy. If you start making good content, then you will be asked to join the Bookmap Junior Academy. Then it's a testing ground. Make good quality content and meet your quantitative threshold as well of just one piece of content per day, one trade journaled. And then if it's quality, then after a month, that's the quickest turnaround. 1 month, you can be asked to join the Bookmap Academy, and you can get Bookmap for free. You can also get the MBO bundle for free, or I'm sorry, I think it's just stops and icebergs for free. So we're happy to extend the wealth here to you. You've put in the work. Great. We want good traders. All right. So if you do really well there, then you can be asked to become a coach. As a coach, you'll basically turn around and give feedback to the Junior Academy members, and we'll give you data as well. Continue on in the process, become a Bookmap streamer, and get other additional incentives as well. All right, so you can just sign up right here. You'll see the form. Okay, so we've got some other news items to go through here. So we've been covering this again and again, but it's worthy to go over this. The supply and demand setups course on our learning center, because we're making content for that. These trades offer edge, and we're going to build out that edge pretty soon. I'll show you how very, very soon. If you're interested in the course content and the setups, go to education, and then you'll see it right here. Click on this, and then you'll see the 10 videos in here. Very simple, very straightforward, and very short. Okay, about supply and demand and using Bookmap. All right, so that's that. And then we're offering this exclusive offer here for Academy members, that we will give you the MBO bundle for a trial here. We did this last month, and a few of you guys took advantage of it, and others asked about it, and they didn't really, they weren't part of the Academy, so they hadn't already partaken. So what we're going to do this time is extend it. If you want to join the Academy, you need to join, but you can join now. But we will follow up, and you need to create and journal your content using the stops and icebergs or the Trader Map Pro or whatever is in the MBO bundle of indicators. And we'll check it in the last 7 days. If you do well or you've created some content, we'll extend it for another week, and we're going to go for a month here again. All right. So anyway, good stuff here. If you have any questions, reach out to Dan on Discord right here. you'll see at Dan 0915. Okay, and then this is the criteria for building out your and journaling your playbook with this content. There's the quota that I had mentioned, quantitative and qualitative, and order flow phenomena, and marking up that within Bookmap. And this is a very general checklist. Coach Vinny is the master of the checklist, and this is what we want to see as you drill down looking for higher probability trades within your playbook. We want to know, what is the market impetus? Why are you trading? What is moving the markets? Then what is your higher time frame key price level? Why are you looking at this level? Is it something, your style of trading? Is it volume profile? Is it support and resistance, or supply and demand? Or is it a fib level, or a floor trader pivot level? We also are looking for the time of day. Okay, different times of day offer different opportunities. So that time of day should be in there as well. And then it gets down into the details of your actual setup and the checklist for that, and an order flow event in that setup. Okay, and that's the edge here. Okay, if we go through this process, you will be making better trades, and you'll have a playbook to go back to and check out your trades. Okay, so anyway, I recommend start with one setup. You can start with one setup from the supply and demand course here if you like, and one that resonates with you, and make 20 markups. That's a good starting point, and you'll be well on your way to understanding your edge. Once you have an edge, then just build it out more, and you'll build out your scaling with your size as well. Okay, this is the number one thing that most traders don't have when they start trading. They don't have an edge, and we're going to build out our playbook. All right, so long-winded on that. I've got some other news in here. We've got a fun competition going on. It is this new TradeStation or Bookmap desk gallery. Let me show you where it is, and it's it hasn't been formally launched, so this is the first time we've made it public. Anyway, it's we can put the link in here for you as well. It's bookmap.com/en/bookmap-desk. Yeah, you just it's very, very simple. Hashtag bookmapdesk from your Twitter account or your Instagram or your LinkedIn account. These are the 3 social media platforms. It'll start. You can upload right now, or submit right now. But the competition formally starts on June 2nd and ends June 30th. Okay, Monday, June 2nd. You can see some really nice prizes in here. There's some criteria for how to enter, and your photo must include. And then now the fun stuff here. Here's JTrader's setup in here. Pretty slick, pretty nice. Look at that. It's a beautiful photo. Here's Scott Pulcini's setup. I don't know how many monitors he has in there. Some are not even fit into the frame here. And then we also have again Scott Pulcini here. And then here's my setup here. Okay, pretty humble. I got a standing desk, a couple of monitors. I got a big screen TV here, and I've got a laptop with a external monitor as well. Okay, so and then we got Dan's here as well. So he's got 2 different laptop setups, or it looks like external monitor here. He's got some speakers, all good to go. All right, so yeah, have fun, take a great shot, learn how to enter, and just put hashtag bookmapdesk and you're good to go. All right, let's see what else. Congratulations to Laura. Laura is a German Bookmap Academy coach now, and she's also a moderator in the German room. She has very diligently been documenting and journaling her trades. They have been excellent. And it's only in German though, so you'll have to speak German or jump over into the German Discord room and get her feedback over there if you like. All right, so way to go, Laura. Great stuff there, and you earned it. All right, so we're living up to the step process from the Academy as you go through the Junior Academy, Bookmap Academy, and Coach. All right, so let's jump in and take a look at some of the work here. And Vinny, we'll start off with you, I think, and we'll jump over to, let's see, I think it looks like you have D&T up first.
Yes, D&T.
Let's see, is
Wonder
he
if
in here?
D&T's in the room.
Don't know if he's almost always here. So, well, we can come back. Let's see,
Sure.
who else do you have?
I have
Vinny.
John.
Okay. Well, let's see. Is John is here. Excellent. Well, and we need to invite John to the stage anyway. So, welcome, John. And maybe he's away from his screen for a minute here. Anyway, let's add it here or get it all set up.
Wait a minute. I think, okay, yeah, John's here. And I think D&T posted something in the room too, so maybe he's around. But I'm ready for anybody.
There we are.
Hey, there you are.
There you
Okay.
are. Sorry about that. Okay.
No problem. So, well, Vinny gave us feedback here. John, if you want to maybe walk us through the trade, and we can take a look at the coach's feedback.
Okay. Let's see here. Is that clear on your screen? It's really out of focus, or is it just me? Let me see here.
The image is a little out of focus, but it looks pretty good to me.
That's close enough. Okay.
Okay.
All right. Let's see here.
Attend, I had
Okay, so the market was working down. It bounced off of some support, and then I came in with some volume. I had demand levels above, liquidity above. That always serves as my target. And so I just came in with some volume, then entered the market, took the long, got my first target off, which I always do at liquidity, and took it up to the second target. Pretty straightforward for what I do. Yeah, that was about it. Mm-hmm.
Yeah, this is Vinny. Yeah. John. Yeah, again, you're a machine, you're just systematic. You have your process in place and you follow through very systematically. And, the really good thing is that you have your checklist. I mean, it's really clearly defined. I also noticed some of your other posts have now, you've added your stops in there as well, which is just, yeah, so you've really grown, you've really expanded into different areas, and you share that in the room with everybody. I noticed that with your setup here, you enter with ticks versus points, and yeah, I think your stop loss was 1 point. I guess my question would be, is that typical for you, 1 point, or I don't know if you use 2 points? The only reason why I asked that is because the market's been fluctuating quite a bit lately, and I was just curious as to how you find that stop loss of 1 point, if it's working for you. Also would like to know your share size, if you don't mind sharing that with us. And you definitely have your targets very well defined. And just to go ahead and I just add, I mean, there's really not much more that you can really add to your post, because it's just so outstanding. And so I went ahead and just added a couple of other assets in there that maybe the audience could recognize or even become more familiar with. For example, you mentioned it before, you have your liquid support in there. It was really good. You have some higher lows that are showing itself. It was in a wedge, and then you had the breakout. And I saw your target up there was about 3 points. I know you used ticks up there. And then your second target was liquid with 6 points as well. So you have 3 points and 6 points. And yeah, so really nice setup again. It's just very mechanical. And you got it. You rock. So I just had those couple of questions, and I wanted to know if you could share that with us if that's okay.
Sure. Okay. So if you look down where I have it labeled as number 3, point number 3, you're going to see how we had volume that came in, pretty sizable volume that came in before I took the long trade. Over to the left, Bruce, where it says higher lows, wedge, over a little further over to the left, over. See that red? There you go. Lots of selling in there, down the liquidity. And we even had liquidity down below. And I was concerned with that. But that failure for the high volume to reach those areas it often causes me to suspect a reversal that might be in place. And then we started to show that. So as soon as volume came into the market where I got long, I'm pretty close with my stop. That's one of those where I see that as a spring. And I'm trading with the volume, and that's either going to work real quick or it's not. Or I want to get out. So I keep my stop really close because if it should fail and turn down, well, then I'm looking at those liquidities below, those liquidity levels below. So, and I don't want to finance that. I don't want to put my stop underneath all that. I'd rather just get out and reload, reassess, and then potentially reload. So yeah, I'm working with volume. I'm working for that influx of volume to come into the market. I'm going to join it, and as long as they keep going, I'm good with it. If not, I want to be out. So that's how I manage to stop. As far as size, it varies. I trade multiple accounts. I'm copying this across several accounts, so it does vary depending upon the size of the accounts. And the size of the accounts range, they vary so much. So I think the most important thing is that I trade in multiples. I'm always putting on at least 2 contracts, and I'm taking that one off. So it's always going to be a multiple of 2, depending upon the size of the account. But essentially, that's how I work those stops. Really close, working with good quality setups with volume. Yes.
Terrific. And just to go a little bit further, if that did hit your stop and hit that liquid, would you consider going or re-entering again?
Well, I would need to see what happens. If it's going to go down, tag that liquidity and reverse from there, perhaps. See, there's lots of things there. If it goes down and gets that liquidity and then they cancel that liquidity above, then I don't have any interest. If the liquidity stays above and we go in and tag that and make a reversal, perhaps I would just have to reevaluate. But it really depends on the circumstance. It's hard to say without seeing something about, does it go down and get the first level liquidity, or does it go all the way down, and what's the volume look like at that point? So there's many elements to consider rather than just price action. And that's what's so nice about Bookmap. You have the volume and the liquidity to paint the picture for you.
Yeah, you definitely keep yourself very situationally aware. That's terrific. And yeah, let's move on to Stan. Stan.
Yeah, perfect. Thanks.
Thanks, Dan.
I'm just wondering if there is another images with maybe a bigger picture. So yeah,
He does not have another one. It's just this is a chart 1 of 1.
yeah, right, perfect. So I mean, yeah, I totally agree with you, Vaney. I mean, you are clearly a machine. Yeah, just maybe a bigger picture to have a better understanding of the context if you are within maybe a bigger view or yeah, time frame levels.
So you mean in terms of time frame, Stan?
Yeah, or yeah, just maybe more history to
Okay.
see if
Okay. Generally, what I do when I take these snapshots is I try to capture what is relevant and still maintain focus. So since I selected to cut this off where the liquidity was, I can tell you that there wasn't much liquidity below, that the balance of liquidity was above. And but I'll keep that in mind and try to give a little larger time frame so that you can see it for yourself. So yeah, okay.
yeah, just my point, but truly, yeah, I mean the entry is clearly great when we see the relative volume and the cluster. The target makes sense, as you said, they were an anomaly. Just to see maybe they were a strong sell move, and maybe it was not a bad idea to take a short if the occasion were there. Maybe not especially a long.
Hmm.
Yeah, that was just my mind.
Hmm. Okay. Now I just saw that as a good pivot. You know, the failure to go down, and then I think Bruce was circling it either. You had some pretty substantial buy volume come in on the volume bars, and that's when I suspected a reversal. Yeah, right in there. A lot of buy volume in there. And so that would have made that trade decision a bit different had that not been there. So it was the volume that was key because of that liquidity below. In fact, when that was starting to work up, I thought, well, I can't get long here. And then the volume came in, um, and then it didn't follow through to the downside, and there was very little sell volume down there until I took the trade. So that's together that helped me make the decision to get long. And liquidity above still stayed in the market. They were still up there, and it was the biggest liquidity levels in the area above. Yep, supply. Yep, and that drives my decision.
Yeah, thank you, Stan. Excellent questions. And John, excellent
Very good.
responses. And how about Bruce?
Yeah, John, it's beautiful stuff yet again. I mean, every time, and I just some questions here. Like, I really like your stop management and your logic and reasoning behind that was great because here's what you saw. Well, first off, number one thing that you're looking for is, do I have a target?
Yeah.
And I love that. Like, you know, time and again, like this is where you're looking for it to go. Now, do I have risk reward to it? And then, you know, looking for it to set up. This is pretty nice stuff. Like, you can kind of see, like, I think, I'm not sure, but because it's a little different of a setup here. But your options levels, you did not have an option level here. And instead, you're going off of this selling here. And you know, you saw it here, and it, like you said, this is where the logic and reasoning is just beautiful. It didn't go through it, right? It didn't even touch this level here, and you know, it couldn't get into here, and you see big buy volume come in. And what I remember from your options trades is you would get in here, you know, and you were pretty aggressive. And just with that, it would kind of curl around a little bit like that. You'd be in, and then you actually kind of sat through this before. This time you're like, okay, let's wait and see, and then because it still might do this, you know, and go back down, and then the volume picks up again here, right? Once you saw that, you go, okay, like this has, you know, the potential and to break out at this point, and just you know, beautiful logic that goes right along with this, and it matches the picture perfectly. It's really nice. There's some questions I have regarding what I like. Stan, I kind of agree. Like, it's kind of hard to get the bigger picture perspective of what's going on. And then the other one is the right in here, right? You start to see it pick up as well, but you didn't get in. And you know, what if like, you know, all of a sudden there's big buy volume in here? Like, would you, I guess, what made you decide to pass on this one and then take this one? Because you didn't know that buy volume came in yet.
No. Well, it was the second attempt. We came down, made a second attempt to go down on very little volume, right to the right
So
about where you are.
so it's
Just
just
before
this.
yeah, exactly.
Okay, so it's this volume in here.
Yeah, very little volume. It made a little run and then it made a pivot and then volume picked up. And, mind you, this is 1 o'clock in the morning Eastern. So the market's asleep. And then all of a sudden we get this volume. It's like it woke up out of nowhere.
Hmm.
And that was part of it. And I just happened to be up and looking and I thought, oh, look at this. So really just this, and I don't know what was happening in the world, but it did pick up at this instance. So the answer to your question is, that second failure, if you will, to the downside, and then the reversal with volume, and then that was it.
Got you. So really, this is the key right here.
That's the key.
Yeah.
That's the key.
Beautiful.
Yep.
Beautiful.
Yeah.
Well, I'm not trying to be devil's advocate here. I'm just trying to kind of like clarify for others. So okay, you got this in here.
Mhm.
And okay, well, you didn't get a retest here. And so you're looking for the retest on that low volume in here. That's really the key. And now you're looking for the aggressors. And if they do come in, this has now the potential to hit these targets.
And that was it. I was kind of iffy about the whole thing until that volume came in about where I entered. And I thought, okay, I'll keep my stop real close. And I mean, if it even looks behind, I'm getting out. And it just flew up.
Yeah. This is like, it probably went maybe one tick against you, if that.
If that,
Yeah.
if that, and I wouldn't tolerate much, because it really, because of all that liquidity below, and the Nasdaq was doing the same thing. It was taking off to the upside. So
Yeah.
that's part of it. You have
Yeah.
the confluence between the two markets.
Yeah. Oh, great. Yeah. Beautiful stuff. I mean, like, you've got a heck of a playbook, and some really nice images and setups in here.
Thanks.
Okay, so I don't know. Any other questions, guys?
I think
No,
that one of the
perfect for
most
me.
important things.
I'm good.
I do the same thing on, regardless of the instrument. I put through some bond trades and crude oil. It's all the same for me.
Yeah.
And I think that underscores how good Bookmap is with volume and liquidity and trading off of that.
Yeah.
It doesn't matter what it is.
Yeah. Really nice. I mean, really like focused, like study in this area here, and then on the retest in here, and this combo in here is really key. And like you said, it did not trade to this liquidity, and you were worried about it, like trading. But once you saw this kind of on low volume, and then this on high volume, is worthy of a shot here to hit your targets. So God, I love it. Anyway, good stuff. Let's move on. And I think DNT is in here. Is he? Yeah. He was commenting earlier. Where are you? So we were looking for you.
Yeah, he's there.
Okay, great. All right. And Vinny.
Hey, you hear me?
Yes.
All right. How are you guys doing?
Doing well. So Vinny, take it away.
Good. DNT, how you doing?
Hey, doing good. How are you doing? Your heat map's looking fine now.
Hey, you have some really good setups over here that I really want to go over. Actually you had two setups that were identical but at different times on May 20th that I wanted to review, that were so good that that I just wanted to go ahead and share these and also get your feedback, because you have a number of a number of assets on here that maybe you can share, educate some of us in the room about. But this is just really just the first that I see over here. Yes. So at the very top, you have a lower high. Well, let's start to the right, the good. You have an outstanding checklist. I thought this was really great. You asked yourself the question, what is moving the market, right? And you provided us with your analysis and your thought process. all right, which I thought was outstanding. And just some of the questions that I had that maybe we can get back to once I just finish up talking a little bit about this some more. Can you expand and educate us upon the following and how you apply these? For example, your ICE, liquidity grabs that failed to go higher, and then all the other assets that you talked about. But for the most part, at the very top over here, again, I saw some lower highs over here. I saw the break, and I saw some passive orders, and it just took it right on down. I saw your first possible exit over there was where the trend line came and touched it, actually retraced, and then it followed straight through to your liquid. So I saw a lower high, a breaking support, passive orders absorbed, and you hit your first target. It looked like it was going to be about 4 points, and your second target was 11 points. So I thought this was a really, really good setup, at least for the short process, for a short opportunity. And Bruce, would you mind going to I think the next one, if I have that right, or okay, no, that's the other one. Yeah, if you can go back to the other one, I'm sorry. Yeah, we'll get back to that one later. Yes. So just to go back on this one, D&T, would you mind taking us through some of those questions, if you don't mind, and share with us your setup and how you went about going through this, please?
Yeah, let's see. So let me read what you wrote. Okay, so all right, so the market opens in yesterday's range, and I had drew out a couple scenarios at the beginning in the morning. So ideally that's what we do is we would get up early and we look to see what happened yesterday and in the ETH and compare it, kind of get a price map of what and draw up scenarios of what might happen during the open. And this was kind of like what I was anticipating. See, I think the market here opened inside yesterday's value area, and it was also, if you look at the left side of the left side, we can see it's pretty balanced here.
Hey, TNT, I don't mind to interrupt, but your date over here was May 20th.
Yeah, okay. May 20th. Yeah. So I wrote that we're opening in inside yesterday's value area. So it looks like it's pretty balanced. If you look to the left, you can see the market just kind of going up, down, and the market breaks up and pulls into that supply liquidity there. And based on the opening, like we're opening in this in balance and inside of balance, and so it grabs this liquidity, and we can see this ICE just adds to the and starts trailing, and then you can see it also starts pushing it down, and so like what happens when we get up to those highs is the market stops moving, it starts to chop a little bit, but we also got absorption there, which is that orange box. So we got absorption, and we also got price stagnating. So it's our price not moving anymore. It's not really accelerating. It's taking a lot of CVD, or so you can see also the CVD accumulation. So you have a lot of buyers hitting it at the highs. I'm sorry, the horizontal CVD accumulation. My bad.
On the right.
That's on the right. Yeah, top right. So that's the CVD. So you can see a lot of buyers hitting it there at the highs as it's grabbing that supply liquidity, and they're not able to get above it. And then you also got absorption, and then you also got price not really able to break higher. And so that's kind of like what I'm looking for on the mean reversion trades. And the ICE is the topping on the cake, and then you and also the buyers tapering as well. But the ICE is the icing on the cake. So you have the absorption, you have the first you have the market pulling into that supply liquidity, then you got the absorption, then you've got the price not continuing higher, so you have that CBD accumulation, and then the buyers tapering, and then the ice topping on the cake, really just putting pressure on the market, bringing looking for mean reversion back to the mean. So yeah, I mean, it's always like hard. It's always hard to, like, when you're looking at mean reversion, because you're always like, well, it's but there's this one had a lot of things going for it. This one had all of those factors that I just mentioned. So this one was almost like slap me in the face.
Yeah, you definitely had. You just listed your four criteria. You had liquidity, you had absorption, you had your CVD, and you had your ICE. So you really run through your checklist. At least shared it with us. That was outstanding. And I did have a question. Where exactly did you enter your trade and did you exit it? Did you put an entry and exit? I didn't see any triangles in here, or if they were here, I probably didn't. I missed them.
I would have to look.
Okay.
I would have to look. Yeah, I didn't mark it on here.
Okay. But yes.
I usually enter like around when that, probably like around when that ice starts to get introduced there, and then it's like a micro structure where it kind of breaks down, where you get that impulse down, and then but if this is inside of that pink box.
Very good.
So
okay.
Inside of that pink box, you get that small impulse down, and then you get the pushes back up to the top of that box.
Okay. Where would you put your stop loss if you have one, or is it a mental?
I'd end up putting it above the ice.
Okay. Terrific. Yeah. Let's go to Stan. Anything?
Yeah, no, nothing. Thank you for your explanation. I mean, I had the same question as Vinny, but yeah, great. I don't know,
Awesome.
Bruce, if you
Okay.
have anything.
Yes.
Yeah, thank you.
Oops, sorry. Bruce, would you mind if I ask John for his input, if that's okay?
Well, I don't know.
John.
Killing me. I'm looking at where you have a trailing ice adds pressure. I'm not sure I get that part of it. What I see with icebergs is essentially it's hidden liquidity. And depending upon the size, I mean, Bruce, how do you handle that? I mean, I want to know where the icebergs are, but I don't see it as pressure. Do you, or am I not getting that correct in terms of my understanding of what ice is and what it can do?
I mean, the way that first off, like taking a step back about the icebergs, number one is it is a subset of liquidity, and that's exactly how I look at it as well, John. As like it's liquidity. It's just hidden from the book. But the reason is why are people doing that? Because they usually have a lot of size, and they don't want to scare people away. It would imbalance the order book, and they would never get filled. So they can get filled with icebergs without showing that size. So if let's suppose this is high liquidity, and pushing the market down, then and there's two things that have to happen though, as John, like you look for two different things. Number one is that liquidity, and then number two is like the transactions into it or the reaction. So in this case, the reaction was sellers. If the sellers continue to pick up, then I'm looking for swings and liquidity on the bid. I'm not looking for them to attack some of the liquidity, but the liquidity is, the icebergs are a little more complex, because who's doing what with what size. Is this some sort of hedge fund? Is it a day trader? Is it a quant? Is it some sort of like huge fund someplace that needs to hedge something for like 100,000 shares over in Nvidia or I don't know, whatever the case may be. So we don't know. But yeah, I think as a confluence, like I have found that if you start to see a lot of icebergs, and you see like the context of a lot of stops going the other way than the icebergs, it can be really good. Or they're both going together, it can be really good. The best I have seen with icebergs is these days where price continues to go down and down and down, and you see like 30,000 buy icebergs transacting. By the end of the day, price goes back up, but there's just massive buying, and usually you can see like a 2-3 day or the rest of the week, move to the upside. So that's a long-winded way of
no, and I appreciate that. I understand what you're saying. I just see that, and I keep my minimum as like 200. Because why would I care about a 25 lot iceberg? I mean, that's a sneeze.
Yeah.
And I don't even know why you would do that. Let me ask you one other question. Now, the icebergs, that is an algorithm, right? That is executed and built by the exchange. I mean, it's not like I can decide, okay, I want to get long 100, fill me 3 at a time. I don't have that option, right? That's something that the algo is going to do for me. I don't have that discretion. Is that correct?
Yeah, that's correct. If you want to, I mean, but you can have an iceberg for 3 or 1. It doesn't matter. And if, like for example, this is important. The iceberg detector in Bookmap. These are what do you call it? Native to the CME. So there are other icebergs that are not. They are heuristic or synthetic, and those, like, let's suppose all of us can do this. We can go over and we can use TT, trading technologies. We can get co-located server, and we can use an order type that they offer called an iceberg. Or hidden order, I don't know what they call it, and you can attach that to their ADL and have an algo run it out, however you want to do it. So we could do it too, but you're correct in that sense. But look, it's possible that, let's suppose you had 100 lot on, and you only got 3 off. And it's because there was only 3 transactions.
Go to the next image.
So,
actually, it shows that what you're talking about now.
Yeah, we don't know. I mean, the iceberg tries to get what it can.
Yeah, I mean, I see that it's present. I don't know. I guess my point was that unless there's a whole lot of size there, I look at it, I track it, I plot it. Walter picks up on it, but I lots of times it's just like, okay, there's an iceberg there. When you compare that to sizable liquidity, it just seems like that's the storyline. But go ahead.
Yeah, this is Vinny. I'm sorry.
Go ahead, Vinny. Yeah.
No, Bruce. Yeah, you raised some really good points. Again, icebergs are hidden orders, and there's just some players that just don't want to reveal their hand. So it's like an iceberg. Like 10% is showing, and the other 90% of it is hidden in the water. So and these can act as support and resistance. Okay, and and I think we can move on to the next one. I think D&T had mentioned that you might be able to see or his use of the iceberg on the next setup that he has. And let me bring it up. Actually, Bruce, you have it up there already, so that's good. Okay, yeah. This was another trade in which that D&T had, and it's the same setup. You know, I was wondering if it was this actually same trade, but it actually is different times, and it's remarkable because both of these occurred, you know, on the same day. I had to go back and check the bigger picture, but yeah, this is the same setup again, only just yeah. So again, here we go. You know, this is you know, he broke resistance. Yeah, you know, you had support. It turned into resistance. It broke it and went down. Same thing. You know, hit his first liquid target of 4 points, and the pullback, it climbs up above resistance. And so this was a question I wanted to ask D&T because, you know, and a focus, I guess, I suppose, is a little bit on risk management. You know, this actually bounced above the support new resistant, well, the new resistant line, and if you had a point or two, you know, you might have been stopped out. I might have been stopped out, and so that was my question to D&T once we're finished is what was your stop? Did you get stopped out? I don't know about that, and but once it did. It went back down and followed through to the liquid, and it looks like you got about 7 points out of that. And then once again, you know, they're really good with you, D&T, is that you have an outstanding checklist. You know, it was a similar chart but different times and another opportunity. So this was outstanding. And yeah, so let's go ahead, D&T. Would you mind going in and expanding and go through your trade, please? Yes, now it looks like you have your entries up here in your triangles. So go at it. I'm ready.
Okay, so the bottom, I don't know, I think the bottom half of the picture of the image might be cut off. Maybe. Let's see. Yeah, it is. Because it shows
I
the
have it on the
bigger
next
picture.
screen here, yes.
On the next image? Oh, okay. Okay, so there's the scenarios on the bottom left that I drew up in the morning. And if you go back to the other image, the one that you just had up, so those are the scenarios there. But actually, because you guys were talking about the ice just now, and you talked about some of them, let's say here the price pulled up into the ice. I don't know if you can see it, but it's at the top of that white rectangle. The price actually pulls up into the ice right there, yeah, and then the price is like absorbing those buyers right there. And you might not be able to see it on this chart, but you can kind of see it on the CVD on the right a little bit. You can kind of see it there. You can actually kind of see the ice adjusting itself up a little bit as well. So that trailing ice is actually like staying in the book right there. It's absorbing aggressive buyers right there as well. And I think you can see it a little bit better on the other image.
Yes, this image I zoomed in on. So yes, I zoomed in to get a closer look on your assets for this one. But yes, it was taken from your other one. Correct.
Yeah. So if you went to the other image, the next one, Bruce, you could probably see the volume a little bit, but you could probably see the volume. Yeah, there you go. So you can actually see the buy delta. So you can actually see the buyers slamming it right there into the ice. So they're headbutting into the ice right there, and the ice is just staying in the book, absorbing all of that. And then the price just kind of relieves itself and goes down. And so that third entry was the better entry. But the first two entries not so great, but the third entry was the better one. Yeah, after all that went off, that was a pretty nice trigger right there. And so market again goes back up. So on the left side, where Vinny marked A on the left, top left, we have market going into the supply liquidity, and B, it goes up into the ICE supply, and it's slamming into it. ICE is absorbing it. ICE is absorbing the aggressive buy delta there, and then that's a pretty nice trigger right there. And again, it's at a location which was yesterday's VPOC, and ETH VPOC as well. And this aligns with the scenario that I drew up on the left. And if I'm looking at number 2, which is the cyan one, where the market opens, goes down. The cyan, which is the middle one, not that one though. Yeah, right there. So the market opens, pushes down. Yeah, right there. You can barely see it, but the market pushes down, tests the ETH low, and then the market I was anticipating the market to go up, but the market was having trouble going up. It was more of a balance. The market had a really strong balanced bias on it. So instead of going up, which it kind of did here, but you can see it's not really going up. It's just fading. It's just kind of exhausting off right here. And so since number 2 didn't play out, I'm looking at number 3 at this point, where the market's going to keep going down right there. Yep. So the market's going to fail over and then go even further down to test this level. Yeah, exactly. So that's what I was looking for. I was looking for I thought number 2 was going to play out where the market was going to keep going higher, but it didn't. It got stuffed and it exhausted to back out into balance, mean reverted, and then came back down low. So that's when I was looking for the lower targets at that point. And the ice really was just a beautiful trigger, absorbing all that buy delta right there for me. I mean, the third entry was the better one. I anticipated it a little bit ahead of the trigger with the first 2 entries, but yeah, the stop was above the ice. And C, your numbers or your letter C right there, where the price actually pulls back. That's also really nice. That's an ideal trigger. That's an ideal entry right there, where even though it pulled up a little higher than where you would normally look for your entry on C, letter C, it pulled to the high volume of that cluster.
Good one. I see it. Nice one. Yeah, nice one. And I also saw you use a subchart with the MBO package down there with your looks like your VPI spike as well. I have that correct?
Yeah. So I have with my VPI, I actually combine them. It's the little white market pulse thing that's going up right there. Yeah. Right there, and then the one to the left. Yeah. Where
very nice.
The white box is at. So I combine the ES and the NQ to get a combined VPI spike. So I'm not just looking at NQ VPI or ES VPI. I combine them so it's a little less noisy.
Wow. Okay. Well, you're gonna have to share with us how you did that.
Yeah, on the market pulse Adam, I think he could just click both of them.
Yeah.
Thank you. Okay. Terrific. Yeah. Your targets. Can you talk a little bit more about those?
Okay, so the first target was just at the high volume of, yeah, exactly, right there, kind of like where the high volume is of that range, just kind of getting to the low of that range. The second target, since it's a mean reversion trade, I'm just looking to get to the cluster where the meat is at, which is the VPOC, VWAP. You can see they're aligned right there, and then mid is just below it. And if I took all my entry right there where it grabs this supply liquidity, that would be a good trade as well. That would be hitting some singles right there. At this point, I think it was we had a really weak low right here at ETH low, so I decided to extend my target to where since I had already planned out what I was anticipating on the bottom left. I was anticipating the market to go lower to hit this to hit these singles down here, which is the pink line. So I was anticipating that. And so that's why I decided to move my target, since at this point, I was assuming that the ETH low was weak at this point. And if it broke, then we can see a stronger impulse move down to that, down to my target. So I was actually going with plan number 3 or scenario number 3 here.
Okay, and I did see some liquidity down there, a little bit further south of your exits. Did you ever consider any of those targets?
I did.
Okay.
Yeah, I did. I think I
I'm
just
curious
left
what your
it.
thought was.
Yeah, I think I left it and I
And
walked away, I
sometimes,
think.
yeah, and sometimes you have your process, right? Sometimes you have, listen, I'm going to go ahead and get out at 7 points, and then that's it, and hey, you're
Yeah.
satisfied, right?
Yeah, and then if you look at the bottom left chart, actually, I drew that up. You can see right. I drew it up actually right there. I put the singles are right there at this level. I anticipate the market to break through those singles, find a base, and then if it finds the base, it can go back up. And it did go through those singles like I anticipated, but I don't really want to. Since I'm not there, I kind of just let it be to where I wanted to get that with my target.
Well, congratulations. You got 7 points out of it. That was very good. Nice job. Okay. Yeah, let's go with Stan. Stan, any comments?
Yeah. Yeah. I mean, great explanation. Really, it seems like you really know what you're doing. Uh, I will, to be 100% honest, I find it a little bit aggressive. Clearly, we can see the liquidity being filled. Um, you said then you have a better price at the number 3, but we can clearly see, like, with the relative volume, that we're like sort of a lot of buyers at that time, and still liquidity at the top. You've got your reason. I would maybe prefer, like, when we see the selling dot at the bottom of the structure with the seller.
Hmm.
But clearly, yeah, I mean, that's just my point of view. And even after for the pullback, it retests, but with bias. So yeah, I find just a bit aggressive at the time.
Even the pullback on letter C as well, you said, because that has a lot of buyers on it, right?
Yeah, I think like bias came just a little bit after. Um, yeah, yeah, exactly. So yeah, maybe pullback, why not? But due to the other buyers that came back, I would be careful.
Hmm.
But I mean, you have your reason. You already explained them, and clearly that matchups. You had your bigger pictures. You have your checklist. Um, just my personal view.
Yeah, I like that. Thank you. Those sellers coming out of that balance, right where he just marked that sell delta, that bubble right there. Yeah,
Yeah,
that's a good
exactly.
one.
And even with that, there is not a lot of relative volume when we see, as you know, like as we compare, for example, with John chart, we could see like clearly a strong volume
Hmm.
going after.
Yeah, since this wasn't really like I get what you're saying. That's a really good point actually. I would look for that on reversal, and that's a really good point. And mean reversion is kind of like a reversal, but this wasn't really in a trend or anything like that. It was inside of like a large balance range. If you go to the chat, I posted an image actually. Let me see. In the chat, I posted an image of what it looked like, of what the market looked like. So since this isn't really like a real like a reversal, this was more inside of a balance. Yeah, there you go. So if you could see to the right of that gray vertical, yeah, you can see the market opened, pushed down a little bit, and stayed in this chop. It stayed in this like balance range. So I'm not really going against like a trend here, Sten. I'm more of kind of just trading inside of a balance range.
Yeah, perfect. That was just about the order flow element, about the entry. But
Yeah.
still, as you said, I mean, all your explanation are perfect. It
No,
seems
yeah, you're
you
right
clearly
though.
know what
For
you
for what you said, yes, I think that's a really good point on a if I'm looking for a reversal like on a trend. That's a really good point, because if I'm looking for a reversal like against the trend, then I definitely want to look for what you just mentioned. I want to look for I want to look for health in the direction of my trade. I don't want to be going against it. Like what you said, that's a really good point. So thank you for mentioning that.
Terrific, Stan. Thank you very much. Yes, and also terrific explanation from you, D&T. You have a great explanation. Malik does a YouTube, and he's really good explaining things, and a Valley fan as well. And you can just go on and on. But yes, let's go on with John, please.
So a couple of questions and then one comment. On the icebergs, do you set a minimum setting for the size of the iceberg, or do you let Bookmap calculate it for you?
Let me take a look. I had to redo it just recently, but I kind of remembered what it was. Let me take a look. Hold on. I think I do have a okay, I got it here. I put, that doesn't seem right. I put 16. So that, I don't think I really know.
Yeah, see, that's really not going to be a value. I don't think.
Yeah, no, it's
Something
not.
that low. I know I set mine high because I want to know where the big guys come in. Because that's where I feel like it's value. So you may want to look at that. You may want to look at different values and see if that guides you a bit by increasing that value. I've tried the automatic setting. I don't care for that because I want to be able to identify. Okay, there's icebergs there. That means he's big because I have
100. 160, I think, is what I meant it to be. So like 160, like around something like that. Yeah, I agree with you.
Okay.
Yeah, I agree with you. Yeah.
My second question is where you were getting short up there in the rectangle B. Where would your stop be?
I'd put it above the ice.
Above the ice, but below the liquidity.
Yeah.
Okay. Okay.
And that'd be like right above that structure.
Yeah. So to your first target, that would be like 1-to-1, if that. Okay.
Mm-hmm.
And then my last comment, see the stops, and then your targets. If you look at this, you can see where price sliced right through your targets and went through liquidity, right? I mean,
yeah.
And I'm
and then
just
bounce right back up.
If you go back and look at your history and first set your targets at the liquidity, you can always adjust it. In fact, it's easier to just close the trade out or just close one out rather than trying to move it in the heat of battle. But you can see where on that second contract it just sliced right through that level that you designated, which is fine. It's a profitable trade. But you see where it went. It went directly to liquidity, and that's why I do it. Yeah, that's the only reason I do it is because it's like a magnet. So that would be my only comment with you on that. You can always, if it hesitates at your level, you have a mental level there and think, okay, if it stalls there, I'll just execute it there. But lots of times it'll slice right through a lot of the logical levels that people post from previous days and so forth, and it'll go right to liquidity. So that would be the only thing. So, Bruce.
Yeah, D&T, commend you. Like, this is looking great. I love this going from John to you, and I see a lot of similarities in here with what you're doing, and you have your market impetus and your higher time frame level, and it's a fantastic filter for you. And then now you're looking at the order flow, and you're looking at order flow events, and then you identified the setup. You identified 3 different scenarios. You went with one of them, and then you managed it. So way to go. A few things like I know you explained your targets. It's all rational and reasonable to me. That you take some off at the swing. and you took some off or you exited at POC. That was your mean reversion trade. You had your reasons for it. I think what John had suggested is something to consider in a separate study if you want to hold for longer.
Bruce, I'm sorry. I guess I forgot to mention this. I seen you guys didn't notice this, but in the bottom right image, that's my exit down there.
Okay, I don't know where that is. Is down here someplace? Or
yeah, okay, so take your cursor, put it okay, so right there. Put it somewhere on there.
hold on.
And I'll guide you. Okay, so go down. There. Okay, right there. Go to the right a little bit.
Oh,
right there. That's the exit.
I see it. I don't know where that is though on the chart.
Okay, so that's 46, 59.46.
Oh boy, it's a little blurry for me. I can't.
Okay, so the entry, the short was 68. So the short entry was 68.
Okay.
And then the final runner was 46.
So this is 46 here?
No, that is my second scale.
Okay.
That's 62. That's
okay.
62.
So did you?
So that's, and so I had a runner going for the single target at 46.
Oh, okay. Okay. Wow. We knocked it out.
Which is that one there. Yeah.
It's down here someplace.
No, it's way down.
It's way down. It's like
way
down
further.
Down here someplace off the chart.
Yeah, off the chart.
Wow. Wow, fantastic.
So that's 67 to 46.
Did you get it?
Yeah.
Okay.
And it went further. It went further through my exit. On the bottom right, you can see. I don't know. You should be able to see my white triangle right there.
I see it here.
Yes, and it went further than my exit. So that's my exit, and then it went further like I anticipated, and then it made a base right down there. So it went all the way down to 30, 36, 37.
Okay.
So it went an extra like 10 points, and then based down there, and then went up.
Wow.
And you can see that on the image I posted in the chat as well.
Wow. Oh, great trade. Well, anyway, what you explained about your target makes total sense. Yeah, you're looking for a mean reversion. You've got it all set up, and you take your profit. And then, okay, so now, you can go back and take a look at it and say like, all right, well, how often does it hit, these areas of high liquidity? Can I stay in longer? Can I maybe even scale in if I, manage this correctly and well, and get in and get out in a bigger move here. So those are, it's kind of a starting point to consider maybe some of those things. But really, I love you embrace this whole, like, from the slideshow we showed earlier, the market impetus, your higher time frame levels. The market impetus, just one thing is like, there are technical levels, that traders are reacting to higher time frame technical levels, and that can move the market, no doubt. It's usually, though, either economic releases in news or geopolitical or both. So is the market on pins and needles, and a tweet comes out or whatever it might be, maybe there's war, maybe oil is crashing or skyrocketing or whatever it might be. So these just I don't have any problem with it. Just consider it also as an impetus.
Yeah, definitely. I actually wrote right there, potential, like the market may be potentially waiting for the VIX OPEX tomorrow. So I agree with you, and I wrote it down here as well. The news can be the market impetus. Like the news can be the one that's moving the markets. And then the next thing that I want to assess after the news is the market in balance, or is it imbalance market?
Yeah.
Those two drivers there.
I think this is gonna serve you really, really well. I also really like the way that you use the icebergs. I think it's excellent. You are using them. These are pretty large, I mean, large enough, like, I don't know, 100 and something, and I don't know how many this is. And there's 2 of them. I know that. I can see that there. And they were fully executed. You're, and that is absorption. That it was absorbed up here. And all of this buying in here is right into that iceberg, and the market does not come back and retest it. So that is your liquidity level in this sense. And I love the way you're using it. You've got a double top in here, using the icebergs as the resistance, or as the supply. It never comes up into this high liquidity here. And also you also have this in here. You're looking for that trap, that you talked about. So there's a lot of nice things going on up here, and I think it's a really good use of the icebergs.
Yeah, the ICE is shown to be a really nice order flow trigger.
Yeah.
Recently.
Yeah, I remember John was using sweeps a lot, and basically stops or sweeps. They're kind of very similar. The icebergs and absorption also are kind of similar, in the absorption indicator. But there's other little tricks along the way, and it's worthy to kind of consider them. It depends on the players, and it depends on a lot of different things, but these larger players getting filled in here with these icebergs in here are front running. It could even be their own liquidity that they're front running, so they're kind of guaranteeing like they're going to get filled in here. So like there's little tips and tricks that you see along the way, because you had the iceberg indicator, you saw this, right? Okay, I've got an order flow event that's and a lot of absorption there. You identified it here, you identified it here as well. Beautiful. And then you got in and you acted on it there. Okay. That's fantastic. I mean, like I think I'm along with Stan. I don't really see anything yet until really here, and you're at the bottom of the range at that point. Yeah. So I don't see that selling really pick up. And they're immediately tested, just like you said. It comes back to the kind of point of control of this little range in here, and then it fails. And again, like I don't really see much until down here again, like heavy selling, and then boy does it really moved then. Buyers are still fighting it all the way along, but that's pushing, that's the fuel to the downside. So,
I really agree with you guys on that. But and it's notable what you guys are saying, because most people don't really, they take reversals and they take mean reversion trades against the trend, trying to fade the trend by not but their side or their direction isn't really healthy yet, and they're going into a premature move or into a premature base, and they get stopped out. Like going against the trend often takes out retail traders and me still. I still struggle with it. But I noticed that this here was in a tight balance. I'm not really fading a trend here.
Yeah.
But what you're saying is notable. And that's, I think, what we something that we can all understand here, since we're all like retail traders, that I'm not really fading a trend here. I'm in a balanced market, and but for if I'm looking to fade a trend, I definitely want to have that my side be healthy. I want to see that reversion mature, or that base mature a lot more than what this is here. But since this was in like a tight balance,
well, and that goes right back to your market impetus, you know, that's guiding the whole thing here.
True.
So great.
I really like the higher time frame key levels, because that is really where we should be activating, and that's where this kind of this played out. So I really like the 1, 2, 3, 4 steps that we got going on here. It's really helpful.
Good stuff. Anything else, guys? Vinny, John, Stan?
No, just outstanding. The only other thing I might add is your middle to the right screen that you have there, because it looks like there's some orders being pulled lower. So you know, that could be another opportunity to go ahead and short. You have some liquidity up there, Bruce. There you go. So you have some liquidity up there as well, and then sure enough, it holds. And then what D&T mentioned earlier, it dropped even lower. So that would be something that I might keep an eye on myself and take advantage of after looking at it even closer. But yeah, that's something that I would consider myself when I see those orders pulling lower, to go ahead and maybe short it as well. So I just throw that out there.
Where it
That's it.
grabs some supply, a little bit of supply,
Absolutely,
and
right over there, right?
and finds nothing else.
Yeah,
No, orders pulling lower. Yeah, so that would be another opportunity, you know, that could be recognized.
Yeah.
Good one. Absolutely outstanding. D&T, good
Where's-
job.
Where's the liquidity being pulled? On the bid somewhere?
Well, I don't know where the liquidity is being pulled, but you can see right where Bruce has it right there. Yeah, excuse me. Yeah. So yeah, you have liquidity
here too, Vinny. Is it here that you're talking about, or is it here?
to the right. Yeah, right there. So it's actually being pulled lower. So now it's establishing lower right there. So you had your indice drop below it, and now it's just consolidating underneath that liquidity for a possible push lower. Does that make sense?
Yeah, I think I see it. It's kind of hard to see.
Okay.
This here in here.
A little bit higher. There you go. That's what I would look at, right? And it's staying below that liquidity. So, and it's consolidating. So, you know, that's another opportunity that could be taken lower. And it sounds like from what D&T said, it did go lower. So, that's another visual to keep an eye on as well, to take this short.
Interesting.
Yeah.
Cool, man. That's really good.
Yeah, that reminds me. Just when we got to move on. But you know, I was watching just a sliver of Charles's stream some weeks ago, and he was talking about. Someone asked about Bitcoin and the price of Bitcoin, and you know, Charles is volume profile or market profile trader, and you know, it broke away from his profile on Bitcoin, and he's not a Bitcoin trader, but someone asked about it, and he just goes, well, it is now trending, and this is on the daily chart, and it's like, I think this is going up to 110 or 107 or whatever it was, all-time highs at that point, and you know, you're kind of doing something similar here also. You know, Vinny, I mean, D&T, like, you know, here's your consolidation. I mean, it can be broken down into so many different ways. Like, here's your consolidation, you know, and you're looking for that mean reversion trade. And then when does it start to do it? You know, after it starts breaking these things in here, and then like Vinny says, another consolidation and it breaks it here again. You know, now you are looking for a trend on this time frame.
Mm-hmm.
So you know, that I mention it because a lot of times, like, you know, we get out of something right when the trend is starting, and all that hard work and back and forth and sweat, and then it starts trending, and like we're out, and it's like, yeah, we did well, and then it just keeps going.
Almost like today.
Yeah, I did not trade today. I was quite busy here, but anyway, and it fits into like all this stuff it's really all the same kind of stuff. It's Wyckoff as well. You got your distribution, and then you're looking for your markdown, and it to trend until you see accumulation or redistribution again. So anyway, just a thought, and wanted to mention it.
Very cool.
All right, so let's see. Stan, we'll move on to you, and let's see.
Awesome.
Here.
Thank you, guys.
Yeah, thank you, DNT.
Thank you.
Okay. This is you, Stan, right?
Yeah, exactly.
Okay. I don't know if he's in here. Fantasy, new trader in Australia. So yeah, he's probably sleeping.
Yeah. So I have short blue or and fantasy. So yeah, let's go on. So I found really great like the notes that he put before and even on the chart. So yeah, to see the morning meeting, the levels when he's looking for, what happened a bit before. I find maybe good to have more images, as I mentioned before. Maybe a bigger picture to have a better understanding with the other flow into. So yeah, he took several trades um, in there. So yeah, he started to take a shot on the left. He take a first scale at the number 3, and then he totally scale out at the number 4. I mean, it's totally agree when we see the other flow. At the time, for the number 2, for example, when he took the shot, we can see like the cluster, the selling cluster, and a bit of relative volume, but a bit higher than with the text. For the target, I think it was a fixed one. And then he took another one lower. I don't know if it fit with a longer term liquidity at that point, still a bit high then. But why not keeping another one for a longer term liquidity that we can see at 59.25. Yeah, exactly. Yeah, maybe because at that time the sell is pretty nicely goes in the good direction. I found aggressive at the number 5 when he took the long. There is not a lot of information. It's clearly against a big seller. But yeah, you managed to take one off at the number 6, and then yeah, exactly. So he took some off, and finally he exits all his buying activity at the number 8 on the top of it. Yeah, exactly. So when we came back, so every time he said his explanation, so that's very great. And he shot again at the number 8. So yeah, with sellers, I find that a little bit of over trading, like you're trying to catch every side of the move. So maybe consider to leave times between trades or things, even if it clearly play out well, you manage to always get your first kill and get risk neutral. And for your stop, if you could explain more about your money management, Um, if you have a mental stop, if it's about a point liquidity, yeah, to have more explanation about it. But yeah, that's a good job. So yeah, I will let Vinny go ahead if you want to add anything.
Vinny, are you there?
Yeah.
Sorry about that. I
John.
had my microphone off. Yes, this is Vinny. Sorry about that. I was just concentrating on his checklist, and he did such a great job of outlining it from 1 all the way through number 10. And yes, I noticed that he uses his icebergs as well on this chart. I think that was an indicator on his first entry that he took, and he took that short. Yeah, so I didn't see his iceberg lines on it, but I did see the actual executions. Looks like he has, but nevertheless, yes, I did notice. I was trying to add up how many trades he did in about 20 minutes. I think I counted 3, maybe there was 4. So Stan, yes, I may agree with you on that. That maybe it's a little over trading, or maybe it's just that he is just so in tune that he can just and sometimes you can get in the zone like that, but otherwise. Yeah, he did his follow through. He took it short and he took it long. So bravo to him in recognizing those specific entries. I think he also had a break even on one of them as well. But definitely a downtrend right here. And you might have just drawn a trend line all the way down from 1 all the way down to like 7, and then you can almost pick and choose to short. Any one, any touch of that trend line that went straight down, just like that, Bruce. Right, and you can just almost just take that all the way down and hit it. Liquidity down there as well. So that's something that actually I was applying today during today's trading session as well. So I was picking and choosing my spots, and it looks like it's the same thing right here. But otherwise, that's about it. So thank you, Stan, for asking me.
Pleasure. Yeah, I don't know, John, if you want to add anything.
Yeah, and to underscore what Stan said, he is aggressive here, but he is working in the direction of the trend, which in this instance is, of course, lower highs coming down, but he's also working towards the imbalance of liquidity below, of demand liquidity below. And then once you got down there, he had his target a little bit lower, but as liquidity came into the market at number 10, he adjusted up and he got filled. So he's working it and he's busy, but I think he's moving in the right direction towards demand liquidity for sure.
Yeah, completely agree. Thanks. And Bruce?
Yeah, interesting fantasy is he finds these great trends. And he was showing the low volume pullback trade, and he was taking it just so beautifully in this other image. He found another one pretty good here. Yeah, like you said, Vinny, like following it down. Yeah, I don't really have a problem if he's kind of over trading a bit. I don't really get the long here at all, but
No.
that's something to learn from. I would say it doesn't make much sense to me. And when you look at this in hindsight, I don't know, fantasy, what you think. Maybe you look at it and go, yeah, I want to rethink that one. And that's what this is all about, is getting better and better, and reflecting off of when, no matter if you're expert trader or beginner trader, it does not matter. And that's what the journaling and reflection off of this, and learning and moving forward is all about. I really like, though, yeah, you are going with the trend, and taking it down to these liquidity levels. This is a beauty here at 9 and 10, yeah, the exit here at 4 as well. So just this one doesn't make any sense to me at all. Just like what Stan had mentioned, there's very high volume here, and yet it worked out for you. And hey, whatever. I mean, it's probably like maybe it's this huge stop run. Yeah, it is actually. You can see 224 down here. So the stop run into that area, and then maybe that's what you saw. Probably, I guess. I don't know if you mentioned that at 4. And then get back in, and because it traded through, and then now you're looking for a retest back up. I can understand that, but yeah, I don't know. Maybe a quick scalp. I'd be out here for sure. I wouldn't. I would take a loss on them. I'm pretty sure. But anyway, yeah, going with the trend here and working it. Way to go. It's putting these pieces together and got your checklist. The other suggestion I would mention is take a page from what DNT had done here with your higher time frame checklist using this market impetus, higher time frame key level, time of day, and then looking for your order flow setup and your flow event in Bookmap. And that might help you filter and find these and allow you to stay in them longer. That's all. So, all right. I don't know. Any more, or do you guys on?
I'm
No,
good.
probably.
Good job.
Good. Yep.
Okay. Let's see here.
That's Shark Baloo.
And we got Shark. All right.
Mhm.
Let's see. Shark in here.
So yeah, it will be interesting if you can
Yeah.
speak a bit about it.
All right. Yeah, I like
Because
this. Look at this new checklist in here.
Yeah.
Mhm.
And Shark, there you are. Let me invite you up.
Accept. Can you guys hear me?
Yes.
Hey guys. Good session today.
Yeah.
Good.
So yeah, I will go. But you can go over it and speak a bit about your trade, so we can see the bigger picture in the other images, and then the execution on these images.
Let me see.
And
What
then
am I?
that's
Oh,
but that was a
right, this.
trade, and apparently
Yeah, this was.
you had
This was yesterday. This was. This is a good example of trading what I want to trade, not what's in front of me. Right. As I've mentioned before, I typically trade into momentum. I use stop limit entries. I use stop limit exits. I think this comes from when I was trading. I was trading the SPY and while referencing ES and NQ charts. I never once opened a SPY or but I would just pull up the options chain. I would at ES and NQ. I would trade weekly options, and I never entered against strength or momentum, and that habit kind of stuck with me as a futures. I struggle with limit, and it's something that I'm really working on wrapping my head around. So that's what I was working on. I plugged in my order. You see it. You see it there as I plugged it in at a pivot low. Price basically bounces off it twice, and I don't get filled. So I chase price up, and I slap the ask, and so I'm in at a much Little to your left, Bruce.
So here, right?
Yeah, so that's where I plug my limit order in.
You got
You know,
filled up
price
here.
ticks off it. I'm not filled. Comes
Oh.
near it again. I'm still not filled. Then I'm frustrated, right? I'm frustrated. I didn't get my fill, so I literally just smacked the ask where you just circled. Boom. Now I'm in at a higher price than I intended. This is not my trade plan. This is I'm all of a sudden flying by the seat, right? That passive liquidity that gets hit was my initial, but I literally just entered right below. Price kind of rolls over before getting to my actual target. That's that liquidity up above. And so, you know, I drag my order up and again. So I'm literally just raising my entry price way above where I intended to get. This is not a big trade, right? This is not a massive vertical distance. So it's still not where I intended to get. And I just kind of sit on it, right? I'm literally watching price sit on top of my break even, and then it rolls over, and I'm knocked out of the trade where I pull my. You could see where I pulled my. I feel like this was a good idea that was ruined by some emotional execution that was driven by me missing my fill. And like I said, I typically I use stop limits, entry, stop limit, exit. I know I give up the spread, I give up a little bit of my trade, but I'm also entering into momentum. But I'm not waiting for price to come down and tag me. This is something I'm attempting to learn on a higher time frame, but it's and I stand by my conviction. That was a good trade. That was a good idea. That I just didn't. I didn't read all the sides. If you look to the left, that market post price change divergence. Here's the first red flag. I got incoming exhaustion. To the left, the white box. Yeah, right there. That's typically I'm looking for that to show me exhaustion to the other side if I'm showing exhaustion to the short side, but I'm still looking to trade this long. I just missed this. This is a misexecution and a misexecution kind of bundled into a single trade.
Okay. Stan?
Yeah, perfect. Yeah, yeah, and we can see on the other images, so a bit about the context, so we can see like yeah, clearly the reason behind your trades too. So makes sense. So yeah, just bad then you haven't got your fill at that time. Because the first one even would play out for maybe a higher, yeah, for your higher plan. So I don't know about your stop, even if you get like at uh, at the price where you were entering. If you let your stop where your first plan was, it would play out, I think. So maybe you would consider to lower your leverage. But you could still leave your stops, I think, like at the structure or where it was, because I don't think we get there before you chase your order. But yeah, just good work as usual, and good to have some notes even when when it has not played out. So yeah, great job.
Agreed. That was we get that delta reversal since we're on the footprint chart. I have my access point that I plotted based on high volume, and it was a good idea. It just emotionally I can get sideways, not getting fill. Before I even realized what I was doing, I was chasing that trade.
Yeah, but yeah, but yeah, it was about peak. I completely understand. Yeah, but yeah, part of our journey.
So as far as the original idea, rather than the execution, I have a liquid target. Price eventually reached it. Obviously, I was in too much of a rush to just sit on things and let the idea play out or look for a better entry. But as far as limit orders, I would love to hear your guys' input. As far as someone like me uses stop limit to enter the trade versus a limit order where I feel I'm catching that entry as price is moving in the opposite direction.
I mean, it depends like how you want to trade too, your personality. Do you want to get like the good timing? I think yes, that will be maybe sometimes hard to get filled on a limit. So I don't think like, for example, if we go back on the first chart, your first entry makes sense. Clearly there is liquidity in front of you, but when we see like your bigger picture, yeah, that makes sense for maybe a bigger move. But at that time, like for example, you enter market with the cluster and the volume. That makes sense. Depends now the move that you are looking for. Will you be in trade for the next 25 minutes or maybe for the next 4 hours? I, I think it will depends. Yeah, more of your personality and the setup plus the time frame. So yeah, I don't know for Vinny and for John.
Vinny, jump in there.
Okay, yes. I was just waiting. I thought you called John. But okay, yes, Shark Blue. Okay. Hey, I just wanted to say, just looking at it really quick, you had your checklist in place, which was terrific. You had use of your subchart with the CVD VPI. That was outstanding. I see that you entered, and when you did enter it, you looks like you had really only 1 point to get to that liquid. So when you entered it, you're only going to get 1 point out of it through the initial target, and it looks like that upper target a little further, you would have gotten 4 points out of it. So it looks like you had, I mean, to me, it looks like you had everything in place, right? So it hit your checklist, it hit what you need, you just didn't fill, and you had it right. And then sometimes, hey, you get really emotional. Listen, you can, like you said, you can get FOMO, you can get a little angry. I missed it. And, all that came into play. I want to get a point out of it. But, sometimes you just got to have a little, you have to work it. I had to work it myself, some self-control. You just got to hold off sometimes because there's going to be another opportunity that's an even better setup, if that makes sense. And also regarding your question regarding, do you enter a limit order or do you enter a market order? sometimes with me, I'll go ahead and set it. If if you have a pullback, I will set up a limit order, because I want to try to get in there at the nearest, 0.25. And other times, I may have to also market order. But when I do an exit, I usually have a limit order exit. And that's it.
For limit order target. So like I said, it's my trade that I posted for today was a limit order exit. And it's very new to me, but I'm gonna work on this because I want to grab some larger. But I stand by my conviction in this area. I accept that my execution was, but every one of these posts that I do, I just want one takeaway. If I could learn one from every single one of these posts and the ridiculous amount of redundancy in my posts, I'm gonna learn from them. So that's the end goal.
Yeah, and you're learning, so you're doing terrific, and you're sharing it with everybody, and everybody's picking up on your education and talent. So thank you for doing that and sharing that in the room. And yeah, I'm tossing it right back to Bruce.
I'm tossing it right back to John.
Hey, Shark, let's see. I think you're probably one of the hardest working traders I've seen in here yet. You have an
Oh, thanks for
abundance
saying
of
that.
talent. You have an abundance of talent, so don't sweat it. If you miss a trade, there are going to be others. You've got plenty of time during the day, 6 hours, 6.5 hours. So I think you just got to put that emotional part in check. You've mentioned that a couple of times just in your conversation, the emotion, the emotion. The emotion is just something you just have to package away. I've never really liked trying to enter on a limit order because I want to be a bit more dynamic. I want to see the trade present itself. I don't want to forecast my entry. And now this is just me, but
I love it.
I've never really performed well that way. When the trade presents itself, when I want to get long, I hit the offer button. And the same thing, if the trade presents itself on the short side, I'm going to hit the bid. Usually I'm going to get filled, and the fills are going to be fair. So, I just think you're trying hard and you might be trying a little too hard. You want to get that last tick. So I think that would help you in that respect. Just wait for the trade to present itself and you get in, period. And not try to, micromanage the entry. Now, like Vinny said, as far as the targets are concerned, I'm all about that. I always have mine in long before I even take the trade for the most part, my longer targets. But yeah, just kind of relax a little bit. Like I said, you've got a great platform to work with. You have an abundance of talent. You have a great ethic. It's coming. Let it go, and let each trade present itself and trade it accordingly. And I agree with everything else that's been said about the technical aspects of your chart, but I just wanted to key on the emotional thing, um, and I think you should spend a little time thinking about that.
Thank you, John. I appreciate that. That means a lot to me.
Sure. I'll let Bruce
Yesterday was
finish
a,
up.
yesterday was a green day. I had a good day. There's a reason I posted this trade because this one got under my skin.
Mm-hmm. Mm-hmm.
And I love what you just said about entries. I don't use limit entries. This is stepping outside of my box. And there's a reason I'm doing that. I've been talking with someone and I have an idea in my head. But I agree 100%. When I want to enter, I want to enter into the strength of. I don't want price to come back and grab me. So I'm going to take that to heart. I do like what you said about the target, though. That's something I'm going to work on. I tend to chase my target in with. The thought being maybe she goes past my target and I grab a couple extra ticks, whatever. I still think, I know I don't think David's here today, but I really like David's attitude of just get in, get out, find the next better trade.
And that's why where he is, that's why he's where he is, and that's why he's been doing it so long. He marks the spots, absolutely. And you know, with the number of trades that you're going to take, does it really matter plus or minus a tick or two? I don't sweat that anymore. As long as it's a positive trade, who cares?
I
In the grand
agree.
scheme of
Thank
things,
you.
right? So yeah, you'll get there. Just relax. You'll get there. Bruce.
Okay. Real quick, John, I wrote something down that you said earlier. Things regarding what you mentioned about the liquidity below. You said, I don't want to finance that. I wrote that down. That's a quote. That's on my trade right now.
Good. Okay.
Yeah, good stuff. I like Shark, the way that you're showing us. I mean, yeah, like what John was saying about your work ethic, and like here you are, you're showing this got under your skin. You're throwing it to us here in the academy. Let's give you some feedback. Yeah, I mean, like just my thoughts on the limit orders is like, how many times has it like hit my price level? Even like the best, let's say I'm a buyer, limit buy order hits my price level, and even the best bid goes below it, but I don't get filled, and it stays there, and it comes back, it retests, and I don't get filled, and maybe even 3 times and I don't get filled, and then price takes off, you know, and it's just so frustrating. So if I mean, I found that if I use a limit order, I usually place it not at the bottom tick that I'm looking for. I place it knowing that it's going to go against me, because that's how I'm going to get filled. It usually, for us in retail traders, we are almost always at the end of the queue. So basically, what does that mean? It's got to trade through our price level to get filled. So then if you want to trade limit orders, or if I want to trade limit orders, that's what I do. And even for targets, I am front running, as you guys know.
Your ticks?
Yeah, a tick or two in front of the high liquidity, typically, for the stock index futures. So that's my thoughts on the limit orders. I don't have a problem using market, but I think even better is to just use like a limit buy on the best ask and a limit sell on the best bid, if you can. It might leave you behind as well, but with these markets, you'll probably get filled. And play around with it, or maybe you just get to the point like just you're like, whatever, I want in, and the spread's like 1 tick in the ES, typically. So,
unless something really crazy.
Yeah. Oh, you keep fading out, Shark. I don't know if you're talking or not.
Oh, can you hear me?
Yeah. It's very spotty though. But,
okay, I'm on headphones. Just saying, like the spread, unless there's something really wild going on, it's $12.
Yeah,
I'll eat that both directions, no problem.
Yeah, I mean, God, I've heard others say, oh, it adds up and it makes a difference. And yeah, okay, I hear you. But on the other hand, like, look at the money you can make by just going with the volume, I don't have a problem. I think what I really like what you mentioned is this is what screwed you up mentally. That's the key here.
I did.
But I think this is a great entry. I mean, look, I don't know where this is coming from, in the bigger picture here, but like, it's coming up toward high liquidity. It pulls back. There's a lot of selling in here. I do see, but I do see some buying over here. And then you start to see the buying coming in is breaking some structural areas here. You get in. The caveat here is like Stan and Vinny had said, you got your high liquidity right here. So heck, it's maybe you scalp it for a point.
Had I taken it at 26 instead of letting that other order get filled, I think I would have been fine. But just the collective of moving that, like I said, it got under my wrote about it in my daily worksheet and just figured that was the trade to.
Yeah, I don't even really have too much of an issue with this one too, to be honest. There's some reasoning from my point of view that okay, you see that now you've confirmed that the volume is coming in. Okay, you know that, and they broke through this liquidity level, and you can see volume or liquidity here, and it's pulled now. But you're looking for kind of a pullback to where it broke out from, and you're looking for the continuation on up to 28. So I don't know, even kind of looks good to me. I mean, the entry is, you'd look actually I would probably be looking for even a worse entry, someplace in here, and then I'd be looking for that move higher. But anyway, I think it's more about your frustration that really kind of screwed you up. I even like the way you manage this. It doesn't really bother me. Is like, okay, so you took a
I
loss.
wanted to move it, Bruce. I wanted to move that stop. That's probably the reason. Probably I really wanted that and just smack it again.
Yeah,
and
but it's telling
I just
you.
sat back in my chair. I just sat back in my chair. And it's not a huge, it wasn't a huge loss. I had a green. Just got under my skin.
Yeah. Well, then, looking at this, like, I even like the way you took the loss. I mean, I think it looks good. I mean, you've got some exhaustion here followed by your heavy selling. So, it's likely went down here and maybe more. But you took a small loss. So what? It's really this that got under your skin and then unraveled you. And okay, well, what are you going to do next time? I mean, what are you going to learn from it?
So where do we become comfortable? Where do we become comfortable with that discomfort of being underwater?
I think we're all going to have to, we all have to deal with that one. I mean, there's no out on that one. It's just manage the risk. I'm out here. This is what I'm looking for. I mean, we've been covering it in the webinars recently. It's like, okay, I'm looking for this to continue, right? This looks like, maybe, some sort of flag pattern, then, go up like this. But now I got this exhaustion and I see this selling in here, I'm out.
Yeah, it makes sense.
And just that's why this doesn't bother me at all. I mean, Kate, you could have been maybe a little more aggressive with it, but it's not that big of a loss. So I think it goes back to you about how you. So here as coaches, you've given you the feedback. How do you want to handle it? And then you've been using replay mode. Go through it again, trade it again, or when this happens again, be prepared for it. Like, okay, you know what? I'm going to use, if I didn't get filled here, then I'm going to cancel that order. And now I'm not saying this is a solution. I'm saying this is an alternative. Cancel the limit, and then throw a limit on the best offer.
Yeah, I like that. Had I entered where I actually out, that would have been a really good trade because she did roll over and head up and take out that liquidity.
Yeah. Anyway,
Bruce, Yeah, there was something that you know, being on the water. I know we don't have much time left, but regarding being on the water, there's something to think about, right? You always look for the next trade. So if you have a risk reward ratio of 5 points and a 2-point loss, you can lose twice and get one right, and you still come out ahead with a 33% win percentage. So that's something to be consider as well. Risk management. That's it.
Yeah, I agree. I agree, Vinny. It's that human hardwiring of not wanting to be wrong, right? Or that moment when my order did not, and all of a sudden my heart rate ramps up, and what the hell? I should have been in right there. Next thing you know, I'm
I know.
slapping the.
We're rushing to put a market order to get right on in. Listen, I'm right. I missed it. Let me just get this thing in here. Yeah, I know what you mean. I know. I've been there too. So I'm with you on that.
Yeah, I really like John's response. And look, you know, this is one trade of, you know, thousands of trades you're going to take. You know, so it's a drop in the bucket, and we're going to be wrong a lot. You know, we're gonna be losing trades a lot. How are we going to handle it? And that's where, just, you know, don't let it get under your skin, and just keep going, and get more experience, more numbers behind you.
All right, thanks, guys. I appreciate it. That's the reason I posted the trade is because everything you guys just said is what I needed.
Good. Yeah, and listen to yourself. I mean, there's that little voice, I mean, inside you, and like, you know, you mentioned it right here. This is your red flag, right? I mean, here it is.
Yeah.
Like, so trade your plan.
Yep.
Yeah, a couple times in my text, I trade what's in front of me, not what I want to trade. This is me trading what I wanted to trade.
That's where you got to slap yourself on the wrist, you know.
Yep. Yeah. That's discipline. That's your discipline question. Yep.
Because you got it right in front of you. You just missed it, and then you got all upset, and then you like missed it again, and then you added into it.
Exactly.
You know, so yeah, now you don't even know if you're trading your plan, and you don't even know if you trust your own plan.
Yeah.
So
Fantastic feed, guys. I appreciate it very much.
Anytime.
yeah, thank you, coaches.
Yes.
Really, you know, wonderful stuff. You know, I love these meetings. I think they're really valuable. And I have to say, I'm sorry to, you know, I'm looking at the audience here. Valley Fan, CMJ, Trading His Life, Laura, Stephen, Rob, some Duzman. Mike M was in here for a while. He's new in creating some content. You know, sorry, I'd love to get to all you guys. You know, would love to go through it, but this is what we have, and our time is up. But we'll get to you. I took a screenshot here, and we'll put you down. For next time, you got to create content though. You got to put it in your spreadsheet, and you know, hey, and might as well take advantage. If you don't have the MBO bundle, you might as well take advantage of it. Okay, so you know, make some content, and you'll get that as well, right? So and then we'll cover you in here as well. So Trading His Life, thank you, appreciate it. Coaches, thanks so much. Vinny, John, you know, Stan, we missing Jack and missing David, but and Laura, would love to have you in, but it's you're German only, German speaking coach only, but anyway, maybe we can hold one over there someday. Thanks everybody, and Vinny, John, Stan, take us out, please.
Great job, Bruce. You know, you rock it again. You know, you keeping us all in line, you know, and thanks for all the insight and all the other coaches too. And also the traders. We're all winning this. So, and we'll get there. Thank you.
Yeah,
Good
thank
work,
you,
guys.
everyone.
Thank you very much. I really appreciate the time.
All right. Thanks, guys. Bye-bye. We'll see you next time.